Hello guys, today I want to dive into a stock that has been making headlines recently. Alibaba, ticker symbol BABA. I know in this latest September quarter report might have raised a few eyebrows, but I've been crushing the numbers and there are some compelling reasons why I'm bullish on Alibaba. Stick around to find out why. Alibaba has been in a recent drawdown. The stock has been under pressure in the last few months, largely due to the Chinese economy not growing as fast as expected. And after these latest earnings, the stock is down 11.5% because management raised some concerns about not being able in the future to get the most advanced US chips for their cloud business, and investors are really afraid of that since the cloud business is like the key jewels in the Alibaba company. It has been an overblow. I do believe this is an overreaction, being down 12% when the company fundamentals are still improving. Looking at the fundamentals of Alibaba, you can see huge improvements. For example, when you look into their net margins, it's around 15%. They are recovering their profitability. In the latest quarter, they had $6 billion in free cash flow. If you translate that to an annually, it could be $24 billion. And when you divide that for their market cap of 188 billion, it looks like a price to free cash flow around 8, which is like a free cash flow yield around 12.5%, which is really high. And they can still have a margin expansion. Imagine the economy on China hasn't even recovered yet. So if they recover, the Chinese economy start to growing fast again, Alibaba margins can increase, and they will be having a lot of free cash flow. They can have a lot, imagine. And if that happen, this company will be printing money. At the moment, they hasn't even recover, and they are printing a free cash flow yield around 12.5% per year, which is really, really high, especially for a company like Alibaba, which is high quality. With this profitability recovering, the return on investment and returns on equity are starting to look really attractive, around 11% and 13%. When you look to our money journey checklist, Alibaba is now all check marks. They are growing in their top line a lot. Their gross margins are decreasing a lot, but are still close to 40%. But their net margins are around 15% at the moment. But with the recovery and their new business turning profitable, we can have a margin expansion to around 20% or even higher. They have a lot of cash in hand at the moment. Their net cash is around 60 billion. They have 80 billion dollars in cash. Their returns on equity investment are being above 10% right now. In my opinion, a wide moat, a lot of free cash flow positive, and they are doing an awesome thing, that is returning capital to the shareholders. They started a dividend and they are doing buybacks. Even though you don't think they are not buying back a lot, they are buying back some shares. Last year they decreased the share outstanding around 3%, and this year is already almost 2% down. But at this valuation, they should be increasing their buyback program a lot, so they can buy these shares at a cheaper price. So when you look into valuation, this is really compelling. We have a valuation that is really compelling. This is a company that is still growing around double digits. For a company this size, this is really good. And when you look into profitability, we already having really good profits, but their margin can expand still. Bear in mind, Alibaba can be a company with the net margin and free cash flow margin around 20% when the economy recovers, and all their segments of their business can turn profitable. For example, bear in mind, Alibaba Cloud is investors are expecting a lot from Alibaba Cloud. AI, it is looking really good for their cloud business, and in the future they might turn to be really good for investors. So when you look into fundamentals, Alibaba is a really, really good company. And In the future, you can have really positive catalyst. The recovery in the Chinese economy, with Xi Jinping and Joe Biden, and their government starting to talk again. You can have some really good things, and bear in mind, Alibaba investors are not expecting much from this company. Anything that can happen that is positive will have a huge impact in the future. For now, we are still waiting for the turning point. At the moment, we are trading at lows of the year, but in my opinion, when you look into my research, the companies I like, this is the better opportunity at this valuation. And after these last 3 weeks, a lot of my stocks have recovered a lot, and there are not much opportunities right now, or there are still good opportunities, but there are not awesome opportunities when you look into quality and valuation. And Alibaba, it's the best one for me. That's why I have a big position, and after this drawdown, which I do really believe this is an overreaction, I do believe this valuation is really compelling for a company like Alibaba. So we have a lot of good things that can create shareholder value. Can have a P expansion. Alibaba is trading at a P of 10. It will be lower than 10, 8. This is really low. Once we turn the point on Chinese stocks, Alibaba can trade at a PE around 20. Just for a PE expansion, we can have a double from here, from Alibaba. Then we have margins expansion. Their margins are not optimized. They are cutting costs, but they are still investing a lot. And I really like to see a company like Alibaba investing a lot. And at the moment, this is the best thing they can do for their business. We can have margin expansions. Another thing that can be really huge for shareholders, it will be buybacks. They say they will continue the buyback program, but management can say when they ended this buyback program, they can start a new one, and they have a lot of cash in hand. They will invest, but they still have plenty of cash, and they are starting a dividend, but this is a small one, a 1% dividend around that. And if they do buybacks, they can reduce the share count around, I don't know, with this cash in hand of 80 billion, they can buy like 40% of the shares. This will be a reduction of almost half of the shares. And if it continues at this valuation for a long time, it will be good for shareholders. Don't forget about it, because Alibaba will be buying back shares at a cheaper price. So there you have it. This is my opinion and why I still continue to buy Alibaba shares. This is what I think of Alibaba, one of the best companies out there, trading at a compelling valuation. That are plenty of positive catalysts that can happen in the near future, and with margins expansion, PE expansion, buybacks, this could create a really good return for the investors. So that's why I do really like this company, and this is what I think of Alibaba. So I hope you like this information, guys. Please like and subscribe. See you next time. Bye.